Hey everybody. Now that the courts have stepped in and it appears that we have, if not certainty, at least sanity in the administration, I thought it was a good time to give a new demonstration of what our tools do and how to read an event risk chart. So let's do that. There's been talk in chat today about Tango Therapeutics. So here it is. So we don't own this. I don't personally own it. Sean doesn't own it. None of our trade group own it, and the fund doesn't own it. The reason is not because of the stock itself. The reason is just because we've been very cautious this year and been sitting mostly in cash and cash-like assets for a while. So the very first thing you notice that when you come to chat, you can just type in chart, and you can get whatever chart you want. If this chart is too large for you, you can just get the 90-day chart here, which will show you a more close-up range. You can also produce a dark chart if you prefer. There we go. This is just basically if you're running on a dark mode. So these are the chart options that you have. The model runs every night after close, like it runs between 8 p.m. and like 2 a.m. to do all this stuff. So that all the charts that you're going to run will produce data for the day before. If you need data intraday today, then you can just ping me in chat and I can always just run a chart through whatever the current price is for you. But since most of the people who subscribe to us are swing traders and not day traders, it's usually not a problem. This chart has almost all the code that we run for our fund. It doesn't have consolidation turned on. That's pretty computationally expensive. So if you want an individual chart that shows consolidation, and I'll just let you know that this actually did consolidate in April, just let me know and I can run one of those charts manually. It also just doesn't show our square wave trading pattern, but that is something that does show up in the alerts channel. We do alert when that happens, so you can just check the alerts channel if you want. So let's look at this individual chart. So what the channel does in the channel is this big green band here, is it attempts to calculate when market participants are going to buy a stock. Now this doesn't tie to psychology or hope. This basically just ties to a combination of fundamentals and predicted catalyst. That's all that it looks at. So you can see for TNGX here, the stock had been above the channel and had come back down. And then when it was in the channel, of course, as predicted, it was purchased, which is why it snapped back out, came back down again, and then jumped out again. In this particular one, you can see a cluster of green dots. These are institutional ads. Okay, so you know that institutions were buying. Since institutional ads are delayed, you know that they probably bought in this window, which is what the model was telling you to predict. If you see a red dot on the chart like right here, that's an institutional sell. So someone actually sold this, which makes sense. It's far out of the channel. That's a position where you have higher price risk. So this institution decided to sell and it came back down again. We have another sell here. Again, the 13G filings are delayed. So this sell reflects a sell somewhere in the past. And it came all the way down. Right here, it actually dipped below the channel. This is typically when we start paying attention to a stock. And coincident with that, it actually tripped our liquidity indicator. So what the code does is it attempts to determine when the price action has changed from more of a distribution phase into an accumulation phase, or you can think about it as the net pressure of the stock has changed, so that if someone is selling, it's less likely to cause the stock to go down, versus if someone is buying, it's more likely to cause the stock to go up. So that's what these little indicators are on the chart. You can see that it tripped one right here before, which is right before a previous squeeze of what looks like 60 or 80%. And it tripped here. It took a little while. I think today the stock is up 30%, so it's basically moved 100% since our liquidity indicator tripped here. Now we have these vertical bands. These are our event windows. The code tries to figure out what the range is for various catalysts that could come up. In some cases, we explicitly tell you, like, there's a conference here and a conference here. And in other cases, you can come down here and you can actually see the clinical information, you can go look at clinicaltrials.gov or clinicaltrials.org, I forget which one it is, to actually get the data related to what these particular bands are. At the top, we have what we call our stoplights. These are related to both long and short-term debt. So on the left is short-term and on the right is long-term. If it's green, it's good. If it's yellow, it's less good. If it's orange, it's bad, etc. Everything's color-coded in that way. Not all charts will have this, but this particular chart has, because it's a penny stock, there will be a band at the bottom. This is the bid price level of $1. So this lets you know when a stock is close to being delinquent with its listing requirements to the exchanges. So that's just something to pay attention to. Quite often stocks bounce off of $1. Sometimes when stocks are below $1, they'll get back above $1 for a period of time for people to unload. And then you have the typical stuff that everyone has. And you have the share count. So there's 100 million shares here. This was the closing price as of when the chart was generated yesterday. This was the 52-week low. And here is the volume, like everything that you're pretty much normal to seeing. So on the zoom in chart, you can sort of get a better idea. You can see right where it did cross out of the channel. So I'm not sure what day this is, probably around April 10th. And again on May 7th is when it dipped below. You can see here where Bob was. Bob was roughly, I guess it's March 12th. You can see that there was volume that followed, but the volume followed after liquidity changed, and it also followed after both of these events. Here's the event windows. As you can see, there's a whole bunch of stuff that it's found that's sort of overlapping. And you can tell based on the color what the probability, I don't want to say that the probability that the news is good, but it's sort of the opposite of the news is bad. So just because something is green does not necessarily mean it's going to be like stellar news. It just means that the odds of it being really bad are very low. You can often have moves in a green event window that go down, and you can also have moves in a yellow or an orange window that go up, and that's just because of the measured risk. So if something is measured to be high risk, like if it's an orange and the data comes in really good, you're going to likely cause a short squeeze. So that's just something that you can pay attention to. So I hope that gives you a basic understanding of how this works and what the tool is designed to do and how to actually read a chart. And if you have any questions, just drop us a note in chat or send us a message on Twitter. And good luck trading.